So what we're looking here with Drillsearch is an Elliott wave pattern in isolation. That means that we're not really interested in bigger picture chart patterns and counts. We're just looking at the immediate pattern that is showing here at the moment. So we've got this impulse up to test the all-time highs which were set back in 2007. Now, as a rule of thumb, generally speaking, on the first retest of a significant high, or in this case an all-time high, we do tend to see price action pause or reverse, at least for the short term. And that's exactly what's happened here with Drillsearch. We've paused and we've come back in this three-wave corrective movement. So that is our Elliott wave pattern in isolation. Impulse, A, B, C back down, and that sets us up for what potentially could be a new test of those all-time highs. Now, the one thing we do want to see, or when we're seeing a corrective movement, is a decline in volume. So you can see here on the way up, volume did increase. You can see our red line, average volume going up. And then during the consolidation phase, reversal, volume has come back down again. So that's a good sign. What we've seen in the last week is another rapid increase in volume, but you can see it's happened right at this area of consolidation right here. I should just also stress before I go on that the perfect Elliott wave retracement, the three-wave retracement, should come back to the 50% to 61.8%. You can see we've tagged the 61.8%. We do not want to go any further than that. That will take it out of the typical expectation, and therefore we should really stand aside. So back onto the volume, we've got this rapid increase in volume, and if you have a look closely in here, we've got a few closes well off the lows. So there might be a little bit of buyer demand coming in, just halting the current decline. But all in all, the rule of thumb is very simple. We wait for some upside momentum to suggest that the trend has resumed and that potentially we will start to see prices advance. So in this case, what we want to do is buy on a break of 132. Ideally, we want to see a close above 132, buy on the next day. We'll place a protective stop below these lows right here. So our risk is basically the difference between our entry and our protective stop. First target, and I think the higher probability target, if we're going to get the upside momentum, is just above the old highs up here. And the wave X highs up here, but before the all-time highs. There's a good chance that we might even have a pause and therefore make it a little bit more difficult to hit target 2. So my recommendation is we'll take any profit if offered at target 1 and really leave target 2 aside. So a nice low risk entry there, good risk adjusted returns if we're successful in the trade, but all bets are off if we drop below this 122 level down here before pushing higher.